Good afternoon and welcome to the Market Wrap for Tuesday, the 17th of March. And look, today was a very important day for Aussies, with the RBA handing down their second interest rate hike of the year, taking the cash rate higher by 25 basis points to 4.1%, as was widely expected. But despite that rate hike, the Aussie market still managed to snap its three-day losing streak, edging higher by around 1/3% today to 8,614 points and essentially reversing yesterday's decline. Now, that's taken the cash rate to its highest level since April 2025. Looking at the statement, it said that inflationary pressures picked up materially in the second half of 2025, and the board made it very clear that its strategy is to bring inflation back to target without hurting the labour market as part of their dual mandate. It was highlighted, however, that higher oil prices weren't the reason for the hike, but rather the fact that we've seen inflation remaining persistently above target for quite some time. Now, in terms of the share market reaction, I think investors did notice the fact that the decision wasn't unanimous like we saw in February, but this time it was split, with 5 members voting to hike while the other 4 voted to keep the cash rate unchanged. But it wasn't a debate about the direction of interest rates. Michelle Bullock said it was the timing. So essentially, it was a hawkish hold for those 4 board members voting to keep rates steady, as they wanted to wait a little bit longer for more data, and particularly with all of the uncertainty around in the Middle East. But look, as usual, Michelle Bullock didn't shed too much light on what could happen next with interest rates. She said every meeting is live, but in terms of market pricing, there's roughly a 55% chance of another rate hike in May at this stage. But keep in mind, we're 7 weeks out from that meeting, so still plenty of time for new developments, particularly with the heightened uncertainty surrounding the conflict in the Middle East. And then, of course, we have the all-important quarterly inflation data due out a few days before the May meeting. So there's still a lot of variables, a lot of uncertainty, and that could potentially shape expectations of what could happen next with interest rates in the coming weeks, and certainly could influence what the RBA decides at their next meeting. Now, looking across the sectors, it was a fairly mixed bag. We saw banks and miners really driving today's small gains, while real estate also rose by 1% despite that rate hike. Holding us back today, though, we did see tech falling most, down by 1.3%. And a similar fall in the consumer discretionary space, which was down by around 1.1%. Energy also falling back by 0.7% after we did see oil prices fall back a little bit, but still almost 50% higher since the start of this month. Now, gold stocks were higher today after 3 sessions of declines for the gold sub-index, where it lost around 10% in that time amid softer gold prices. Today, though, many gold miners were on the winners list. We saw Pantoro Gold doing absolutely best. It was up by around 12%, but it was also supported not only by higher gold prices, but a broker setting its target price to $7.50 per share. And of course, the company's share price is currently at around $3.82. So that target price well above its current levels. West African Resources also climbed after its full year profit more than doubled, thanks to selling more gold and also higher gold prices. Challenger rose by around 3.5% after reducing its takeover offer to buy Pepper Money from $2.60 per share to $2.25 per share. And that was due to a deterioration in market conditions and the operating environment. And of course, on the back of that news, we did see Pepper Money shares drop by around 15% in today's session. Other losers included retailers. Many of them went backwards today, which certainly weighed in the consumer discretionary space. We saw Temple & Webster doing worst on the ASX 200, down by almost 8%. Coal miner New Hope fell from its highest level in over 2 years. It was recently propelled by a surge in coal prices linked to the conflict in the Middle East, and that propelled many other coal miners as well in recent weeks. But today, New Hope actually released its half-year results, posting an 84% drop in profit over the 6 months to the end of January due to weaker coal prices. Keep in mind that the recent surge in prices began on the final day of February, so it wasn't captured in its half-year results. We also saw Yancoal falling back by around 5% today from its recent 9-year high. And SEEK traded ex-dividend, and that caused its share price to fall by around 2% in today's session. Now, in terms of currencies, we did see the Aussie dollar dip from around 70.8 US cents before the RBA decision to around 70.6, but you can see the Aussie is firmer against the euro and the Japanese yen. Now, looking ahead from here, tonight the Fed starts its 2-day policy meeting, and then they'll decide their interest rate decision on Thursday morning Sydney time. They're widely expected to keep rates on hold, as are many other central banks around the globe towards the tail end of this week. Tomorrow locally, we have more stocks trading ex-dividend, including Auckland International Airport and Brisbane Broncos, and of course some companies paying out their dividends, including the likes of Lendlease, Computershare, REA Group, Sims, and also Medibank. Have a nice night.